Welcome to Iron Financial. In this market, let's be blunt, weakness is a liability. Our mission, our only mission, is to help you forge a stronger portfolio. We're here to cut through all the noise, all the hype, and find the actual structural integrity in the companies you invest in. And the way we do that? We examine companies at their most critical turning points. You know, those moments of intense pressure where you finally find out if the foundation is solid rock or if it's just sand about to wash away. Today, we are putting one of those moments under the microscope, the exact moment a company earns its very first dollar.
So, let's just start with a fundamental question, because it's everything. How much is the first dollar a company ever earns actually worth? You might think, a dollar's a dollar, right? Wrong. That couldn't be more wrong. That first dollar can be worth everything. It can be the tangible proof of concept, the hard-won validation of a decade of research, the very first brick in what could become an empire. Or it can be worth absolutely nothing. A costly illusion, a brief blip on the radar screen right before a complete and total collapse. The difference between those two outcomes depends entirely on the foundation it's built upon, and, critically, the load-bearing structure it's meant to support in the future.
So today, we're putting Milestone Pharmaceuticals, ticker MIST, under that microscope. They just generated their first ever dollar of revenue from this new product you see here called CARDAMYST. But the real question for us, the iron financial question, is what does that dollar truly represent? Is it the beginning of something massive, or is it just market noise we should ignore? All right, so let me get this straight. We're talking about a small biotech company with a new nasal spray. I feel like I've seen this story 100 times. There's a big press release, a flash in the pan, a tiny bit of revenue, followed by a whole lot of shareholder dilution to keep the lights on. Are we absolutely sure this is the solid rock you're looking for, or are we about to watch another one of these things crumble into dust? That is the exact question we are here to answer. Let's put it to the test. Let's see if there are cracks in this foundation.
All right, let's break this down from the ground up, the right way. Every solid investment, every single one, is built on a foundation of solving a real-world problem. In biotech, that means surviving the absolutely brutal transition from the safety of the lab to the chaos of the open market. This right here, this is the first real stress test. And let me tell you, most companies do not pass. We need to see if Milestone's foundation is actually solid.
So what is the problem they're trying to solve? As this slide shows, Milestone is targeting something called paroxysmal supraventricular tachycardia, or PSVT for short. In plain English, that's a frankly terrifying condition where your heart suddenly, and for no apparent reason, just redlines. The heart rate skyrockets. This isn't just a minor nuisance, it's a real medical issue that sends people straight to the emergency room, absolutely terrified that they're having a life-threatening heart attack. That's the problem they're solving, a problem with very real pain, both physical and, of course, financial, attached to it.
Okay, a serious condition, I get it. But how many people actually have this? Is this a niche market we're talking about? Because a great product for a tiny market is still a bad investment. You simply cannot build an empire on a cul-de-sac. That is a fair question. You always have to ask about the size of the opportunity. So look at the numbers. We're not talking about a handful of patients here. The data points to a potential market of over 2 million adults in the United States alone. This is not some boutique ailment. It's a substantial patient population that is actively, desperately seeking a better solution than an expensive, stressful trip to the ER. This is the first pillar of what could be a solid investment thesis, a large, clearly defined, addressable market.
And here is the second pillar, and honestly, this one is absolutely critical. CARDAMYST is the first new treatment for this condition in over 30 years. Just let that sink in for a moment. An entire generation has gone by with zero innovation in this space. For 3 decades, the standard medical advice has been try these weird physical maneuvers, like bearing down or splashing cold water on your face, and if that doesn't work, well, go to the emergency room. That's it. This means Milestone isn't just competing in an existing market, they are effectively creating a new one. They have a massive first-mover advantage with nothing but clear skies ahead. In the hyper-competitive world of pharmaceuticals, that is as rare as it gets. It's a structural advantage you can't ignore.
So that's the setup. You've got a real medical need, a large patient population, and no new competition for decades. A pretty solid start. Now we get to the catalyst for this entire analysis. The company's recent fourth-quarter earnings report. This is the moment they had to prove they could turn all that potential into tangible, reportable revenue. This is where the rubber meets the road. This is where we see if the engine actually starts.
Now, before we get to the result, we have to understand the expectation. We have to know what the market was thinking. And let's be crystal clear about what that expectation was. For a company that has never sold a commercial product, the consensus estimate from Wall Street is pretty much always the same, 0. A big, fat nothing. The market's baseline assumption, the number baked into the stock price, was that they wouldn't sell a single unit. The bar was literally on the floor. Remember that, because in this game, it's all about expectations.
So here's the crucial point. Against an expectation of 0, Milestone reported $1.5 million in revenue for the quarter. They didn't just step over the bar, they cleared it by a mile. This number, $1.5 million, represents the very first commercial dollars the company has ever earned in its entire history. It is the definitive proof that they have successfully made the leap from a speculative development stage company to a real commercial stage company. The machine is on.
Now, looking at this chart, it's really easy to just dismiss the number. $1.5 million? That's pocket change for a major pharmaceutical company. It's a rounding error for Pfizer, but that is absolutely the wrong way to look at it. The absolute number isn't the story here. The real story is the gap. It's the massive disconnect between an expectation of 0 and a reality of 1.5 million. This signifies that the product is officially on the market, real doctors are prescribing it, and actual patients are buying it. The commercial engine has started.
Okay, fine, so they beat on revenue. But you know what? Anyone can buy revenue. Did they just burn a mountain of cash just to get that headline number? What about the bottom line? Was this a profitable beat, or did they just open the fire hose of spending to get a number they could put in a press release? That is always the right question to ask, and the earnings per share, or EPS, gives us the answer. The Wall Street consensus was for a loss of 16.32 cents per share. They came in at a loss of 16 cents flat. Now look, it's a razor-thin beat, but it's incredibly significant. It shows that even during this ridiculously expensive launch phase, they kept a tight grip on their costs. It's a very early, but very positive sign of operational discipline.
And that brings us to the next critical question, right? You've established they made their first sale, you've established they even managed their costs a little better than expected, but that doesn't tell us about the real cost of achieving this milestone. How much cash do they have to burn to generate that $1.5 million in revenue? Is this foundation being laid with solid, reinforced concrete, or is it built on a mountain of debt that's just going to crumble under its own weight as soon as there's a little bit of pressure?
Let's answer that question directly. No hiding from the numbers here. This is the other side of the coin. For the full year, Milestone posted a net loss of over $63 million. This is a stark, unavoidable reminder that launching a new drug is an incredibly expensive business. That first $1.5 million in revenue came at a very steep price. This is the cash burn required to get this machine off the ground and running.
So, where did that $63 million go? This slide breaks it down pretty clearly. First, you have the ramp-up of commercialization costs. That means hiring an entire sales force, creating marketing materials, building relationships with distributors, and pharmacy benefit managers. This is the heavy lifting. Second, you have the direct product launch expenses themselves. And third, they are still a pharmaceutical company, so they have ongoing research and development spending for future indications or entirely new products. None of this is surprising, but it quantifies the immense investment needed to transition from an R&D-focused entity to one that can actually sell a product at scale.
But look, a loss is only a problem if you can't handle the burn rate. So let's drill down into the balance sheet and check the structural integrity. And this slide, this tells a really fascinating story. Look at their cash position. It absolutely exploded by 188%, jumping from about $25 million to $73 million. They raised capital specifically to fund this launch. They knew the cost was coming, and they prepared for it. But now, look at the other side of the ledger. Look at liabilities. They're up 15% to almost $72 million. So the foundation is bigger, and they've got a lot more fuel in the tank for sure, but the structure is also carrying more debt. They've leveraged up to build this base.
So the past is prologue. They've spent the money, they've launched the product, and they've booked their first revenue. The foundation has been laid, albeit with some leverage, as we just saw. But the real test for any investment is not what a company has done, it's about what the market expects it to do next. And for Milestone, the market is now expecting them to climb a veritable mountain.
Hold on a second. Let me make sure I'm reading this chart right. You're telling me they did $1.5 million in Q4, and the analyst estimate for the very next quarter, Q1 2026, is $76.5 million? That can't possibly be right. That is an astronomical leap. Is that even remotely realistic? Or is this just Wall Street getting completely caught up in the hype? That looks like a setup for a massive, crushing miss.
No, it's not a typo, and your skepticism is exactly what separates a good investor from a bad one. You have to question numbers like these. But there is a logic behind the seeming madness. This massive 50-fold jump isn't based on one patient at a time. This is about the mechanics of a drug launch. The analyst models are factoring in huge initial stocking orders from pharmacy chains and major distributors who need to have the product on their shelves nationwide from day one. It also assumes a rapid uptake by doctors who, remember, have been waiting decades for a new option. It's aggressive, yes, I'll grant you that, but it's not just wishful thinking.
And this quote from Chartmill, it just sums up the entire situation perfectly. The substantial disconnect between current results and future analyst projections highlights both the potential and the uncertainty. This is the core tension of this investment case, right here. The potential for truly explosive growth is there. The numbers and the market dynamics prove it. But the uncertainty, the sheer execution risk is immense. If they hit anywhere near that $76 million target, the stock could re-rate significantly higher. If they miss badly, the market will punish them severely for not living up to these new, mountainous expectations.
So that's the battlefield. A massive market, a brand new product, and now a mountain of expectations. It all comes down to execution. So what's the verdict? We've seen the numbers, we understand the risk. Is this an opportunity to get in on the ground floor of a solid new structure? Or is it a classic trap for unwary investors who are just chasing hype? What does their plan to run this commercialization gauntlet actually look like?
Okay, let's look at the company's actual blueprint for tackling this challenge. This isn't just hope, it's a strategy. First, their initial sales force already covers territories that include 50% of the potential patient population. They are targeting the highest value areas first, which is smart. Second, the focus is squarely on making healthcare providers, or HCPs, aware of this new tool in their arsenal. This is all about education. Third, we've mentioned it before, but it's worth repeating. The lack of branded competition is a massive strategic advantage. And finally, they're ensuring accessibility. The product will be available through standard retail distribution channels, making it easy for patients to get their prescriptions filled. This is a sound, logical, and focused plan.
So, let's bring it all back to where we started, that first dollar. That $1.5 million in revenue was so much more than just a number on a spreadsheet. It was the signal that Milestone has fundamentally changed as a company. They have successfully navigated the treacherous journey from being a speculative clinical stage company to being a revenue-generating commercial stage company. That first dollar was the key that unlocked this entire new phase. But it is crucial to remember that crossing that threshold doesn't mean the race is over. It just means you've finally qualified for the main event.
And that really is the final crucial point to leave you with. Milestone has spent the capital, they've built the foundation, and they have proven they can get out of the starting blocks. They have officially reached the starting line of the commercial race. But now they have to run it. They have to execute on their strategy. They have to meet those towering expectations, and they have to manage their cash burn effectively all along the way. The first dollar was the milestone that proved they were a real company. The next $100 million will determine if they are a great one. 2026 will be the year of validation. Thanks for joining us at Iron Financial. Stay strong.
Quick disclaimer, everything I share is for entertainment and informational purposes only. I'm not a financial advisor, so please do your own research or talk to a professional before making any moves with your money.